Hey guys, it's Crossroads here. Today I wanted to give you a quarterly portfolio update. There are two new positions in my portfolio from last time, and my cash position has been reduced, my cash and swing position, dramatically, as you're going to see in just a moment. I want to show you what I've deployed into, and we're going to go through each of these holdings, and I'll talk a little bit about them and what I've been doing in my portfolio. All right, so first, this is the breakdown. You can see that this is the allocation here, that some of these are quite heavy allocations. And also, this is in my other portfolio, but I'm about 5% in my crypto, 2.1% cash. So I do have some cash remaining. But for the most part, it has been deployed versus last time that this was allocated more towards half of the size of crypto. I've added Ethereum essentially since that. That's a change there. And I've reduced cash by quite a bit deploying this. And I also had a large swing position, which we're going to talk about in a minute. So the two new positions, without further ado, are these two right here. And these are all the stocks in my portfolio. And I'll show you where each of these line up. So the first of these is Bitmine. Bitmine is one of these that is not a really a core position. I could technically just leave it in my swing portfolio. But to be honest, this is a longer term swing. I'm looking at least 2 years for Bitmine and holding Bitmine. And so it's at 10% allocation right now, which is about the size of what I allow myself to do as far as a swing portfolio. Now, technically with Bitmine, it's not all shares, mostly it's shares, but I also have some vertical spreads. I have a little bit of BMNU there that I'm just lumping in. It's just a tiny bit though, literally one put. So, and I've also been buying shares of BMNR that I plan to hold probably long-term, or I might convert them at some point to Ethereum with just the premiums. And so those are free shares. So I figured, rather than breaking it down saying, hey, this is all swing, it is, but it's all in Bitmine. I don't have really anything else in swings other than just like tiny, like hundreds of dollar stuff in any other swing. So those are not meaningful at this point. The other, of course, new position is Air Test Systems. Air Test Systems actually will slot in here at 6%. Now, this isn't, a massive size position, but with Air, I've done other videos and talked about what they do, but they're very well positioned with what's happening in the AI arms race, with burn-in memory tests, burn-in tests as well, the wafer level for the different mediums that you have for processors. And so whether it's gallium nitride, silicon carbide, and also silicon photonics, plus what they're doing on the hard drive side, all of these things are needed for the AI arms race and data centers, and burn-in tests are already happening. But as the intricacies continue to ramp up, there's more and more need for precision, and Bitmine offers that, both whether it's at the wafer level and you're testing this before they're actually individual dies are cut, or packaged parts. You can enter there. They can help you with either through whatever medium. They're literally the only ones that do gallium nitride wafer level testing in the world. They're also the only ones that do both packaged part and wafer level burnings too. So they're positioned to help anybody. I think on some of their product lines, they definitely do have a technical advantage as well. See a lot of customer interest. I do think it's going to be probably 2 quarters before we see meaningful revenue acceleration. And so that's part of the reason why just a little bit too much too soon on the stock price action, why it fell after earnings. Even though it beat, it just sometimes you're priced beyond or to perfection. And that was the case with Air. Now, this is a long-term holding for me. It's a micro cap, so it's going to be very volatile. If I had done this 2 weeks ago, when it's trading up at 34, it looked like a much larger percent. If it falls under 22 and lower, I'm actually willing to add there as well, up to about 10% allocation. Normally, I don't do that for microcaps, but this is a little bit unusual one. They're not exactly burning cash left and right. They're right there at the edge of profitability just because of some headwinds with silicon carbide and then this new product mix as they completed that Incal acquisition. So regardless, Air Test Systems, 6% of my portfolio. All right, we'll do the obvious one now. The number one holding in my portfolio is Robinhood. Now, was not always the case. My allocation for Robinhood was something around 5%. But when you have a stock that goes up multiple hundreds of percent over a couple of years, that even if you take some gains, and I did, and then I ended up saying, this is the base level shares that I want, it becomes a massive position in your portfolio. And I was very blessed when we had the tariff woes a couple of weeks ago and everything fell. I actually had some of these covered calls underwater. They're all shares. I didn't really want to get rid of Robinhood there. Even though it's not trading cheaply, I still feel like Robinhood's going to be very well positioned over the next decade. It's very cyclical as well. So I'm not adding. I'm just happy to hold it. Sell covered calls carefully, maybe a little bit more carefully next time because that was quite a run. But yeah, I've done literally nothing with Robinhood, and yet it's increased its share in my portfolio to over a quarter. All right, so the next position, the second largest in my portfolio, is PayPal. This is the same as last quarter, although it's a little bit for different reasons as well. If you look at PayPal itself, it's underperformed. It has. It's been an opportunity cost. It absolutely has. The company is doing some really good things. The stock is showing the exact opposite as well. Braintree headwinds are shifting, so that we'll see not many of those in quarter three and basically none in quarter four. And so I think quarter four will actually be that turnaround quarter, not in terms of actual results for the company. They've already made the turnaround, but in terms of stock, which is hard to predict. No guarantees on that. So, hey, if that happens earlier with quarter three earnings, great. I'm all for it. They're going to post $5.5 billion in free cash flow over the second half of the year. And there's some very clear levers that they've pulled and pushed as well, rather, that are going to be driving revenue in quarter four and also in quarter one as well, between the monetization of Venmo, it integrated into PayPal World in January, and also what they're doing with Buy Now, Pay Later. A lot of Venmo products, a lot of ads also beginning to launch. And I think that quarter four, because of the guidance, and also the top line revenue acceleration as well, it'll be tougher for the market to actually ignore PayPal at that point. Quarter three, it'll look a lot like quarter two. And so since that didn't get the market excited, even though it was a really nice beat and a very good quarter, I don't have too high of expectations, but I'm happy to hold this. And I added to this as well, mostly, again, shares. I have some leaps that have just bled and done terribly. And I did add a single leap today as well. I'll add them here and there. Very conservative, $100 strike for the end of 2027 in December. Just a little bit more volume on those rather than January 28th. All right, my next largest holding is SoFi. That shouldn't surprise anybody, but it's about 14%. It's around actually where it was last quarter as well. Now with SoFi, I have actually trimmed the position. A lot of my SoFi are shares. I don't plan to trim those. I'm holding them, selling covered calls carefully at some points as well. But I also have some leaps, and I had bought a bunch of leaps for 2026 in January. Black owner trading in single digits. I just was like, okay, this is stupid. The price is stupid. Let me buy, in addition to shares that I hold long term, a bunch of leaps as well. I didn't plan to convert any of those, and in fact, I haven't. I sold my last few leaps in 2026. Even though they're very much they're very much over the strike, which means you're not burning much in terms of theta decay. That's one of those where I'm like, let me just go ahead and lock in some gains here and put it into one of my other positions as well, which helps build out those things like air test systems, add to PayPal, and of course, my Bitmine position too. So I still think SoFi has tremendous tailwinds over the next 2 years. The business is doing really well. I think quarter three, we'll do earnings prediction probably next week. It's going to turn a lot of heads. Now, top line, it will not grow as much revenue by percent year over year as it did the previous quarter. But a lot of people, a lot of bears were thinking, oh, that's just a one-time thing against a weak comp. They are wrong. This is going to be a phenomenal quarter. And if I had less than 10% SoFi in my portfolio, I would immediately top it up to 10%. It's a very strong position. All right, next is actually Palantir. Now, Palantir was at one point in 2022, 90% of my portfolio. Of course, it's run up a lot. Really, the only problem with Palantir, I guess you can technically say international growth is slower, although they did have some really neat announcements regarding that this quarter. Other than that, the only issue with Palantir is the stock price. The stock price is very expensive. It continues to be. And a lot of bears think, it's going to crash and fall to $25 a share, which is, like even the most bearish person on Palantir would very likely buy well before then. And there's a lot of us bulls that realized, hey, we'd actually like having a little bit larger position. We would buy heavily as it falls. Now, that doesn't mean that it can't fall or it can't fall meaningfully, that we might not even be done with double digits at this point. But I have decided last quarter, based on the strength of that, the clear acceleration, I think this is going to be another tremendous quarter for them as well, to just do the world's slowest DCA. So this means that I'm adding shares in the single digits periodically Not massive buys at all, but I figured I'll go ahead and start that trickle DCA. And of course, if the stock price does collapse and nothing else has really changed, I'm happy to double, even triple this position. I have a lot of conviction in Palantir, but again, it's very expensive. So just be careful with that one if you are new into that. Okay, so there's just 4 positions left here, and I'll actually do the smallest one here. This is actually Tesla. Now, I've talked about it before. Tesla is actually, I think I have 1 or 2 shares less or fewer, and I probably will add those back here in the next month or so. What I'll tend to do with positions where I'm like, hey, I don't mind the sizing of it necessarily, but I need a little bit more to round out a lot of 100 for Bitmine or another position where I plan to sell covered calls against. I'll take a little bit from a position, I'll add it to that. Not usually a permanent thing for Tesla. Again, I am sizing it according to risk. They're doing a lot of things well as a company. There seems to be less of a headline risk from Elon Musk. Robotaxis are doing okay, rolling out. There haven't been any major incidents. And of course, full self-driving is doing very nicely. Optimus is pretty far away, and that's really why I'm positioned in Tesla. Of course, I love the product. We own 2 Teslas. But it's expensive right here. And I feel like most of those big revenue drivers and shifts are coming when Optimus is actually deployed, which is years and years away, even on the commercial side, much less on the consumer side. Now, beyond that, I do think that Tesla, it has surprised me. I'll just be honest. I did not think we'd be trading in the 400s here, especially given the current macroeconomic environment. But I do think Q3 is going to be a tremendously weak quarter, simply because that demand lever of that tax credit benefit was pushed up to Q2. So they had a great Q2. Q3 may look pretty terrible, and Q4 also might look very soft as well. Now, if that's the case and Tesla tanks, of course, the risk depends on the stock price. If we're looking at Tesla in the mid 200s, I'll be very glad to add and top up. And as we continue to fall, I will be glad to add more, even though it looks like on a PE level, PS level, whatever you look at it, PEG level as well, that it's still expensive. I still want a piece of this. That's why I'm not willing to part of it with it here. Now, beyond this, just 3 positions left. Now, the smallest one of these is Hims and Hers. Hims and Hers had a really great release earlier this week, where they announced that they were launching their menopause and perimenopause products. And they also said that their Hers product line, that they anticipate that the revenue will grow to $1 billion through 2026. It's a smaller half of the business, but that's we don't know where it's accelerating from, but I get the idea that that's pretty meaningful acceleration. Otherwise, they would put it out like that. And I think probably in this quarter, they'll let us know where it was currently. That'll make this data point more relevant as well. Now, what I have not liked, of course, is the slowing core revenue. It did slow, and technically they kind of missed their own guidance for the first time ever in the previous quarter, at least the way that I'm looking at this. I see this more as a next year type of play, and so I've not added anything to my Hims position. In fact, it's underperformed most of the rest of my portfolio, and so it's actually under 2.5% simply because of that underperformance. I'm just happy to hold here. And will I add to Hims? Yeah, if the price keeps falling down or we get to next year, and I see that this core revenue acceleration really is happening with testosterone, with these menopause products, and also what they're doing in Canada, also with Zava as well. But for right now, I think that this is more of a range-bound type of play. We might see. Also, really didn't care for the CEO retweeting another creator and saying, basically, that he was talking about a short squeeze. I don't like my CEOs talking about that. That's just me. So happy to hold here, but that did give me a little bit of a pause right there. Now, beyond that, there's just 2 positions left. And so we have Nvidia actually is a smaller of the 2. So Nvidia is at 4.9%, and that leaves Nubank at 5.8%. All right, so Nubank first. Nubank is just a very strongly positioned bank. They continue to take market share in Brazil, even though they dominate that market. If you're a bank, there's a lot of products you can do. They have some new leaders in the C-suite. It seems like that's going well as well. There were some issues as far as the Brazilian real and the US dollar and geopolitics. Those are not fully resolved, but they seem a lot better than they were back in January. Of course, they have launched in Mexico. Plenty of competition there with Revolut and Mercado Libre coming in. But I think that all three of those will take a lot of market share from those existing legacy banks. They just have a lot more to offer. And Nubank, honestly, was the first mover there in terms of like actually a tangible foothold, not just announcing that they were going to be there. With the depositories, actually them shifting that up, I think that they're seeing an opportunity to be very aggressive in that market. And they also, of course, filed to come here to the United States, which will be a very easy layup for them. I don't think that they'll be competing necessarily with like Revolut tried in the United States head to head against major banks, but they can capture a good portion of that Latin American population that has family back in Mexico or Colombia or even Brazil, that they're just wanting to have that connection through Nubank. They make things very easy and seamless. And of course, they cater very much to their client audience as well. Now, Nvidia is just a little bit under 5%. I did add to Nvidia. I did add to Nubank. I should have mentioned that as well. Nvidia is it's at the core and central to the AI wave, which is very legitimate. I don't know that many people are still saying it's all smoke and mirrors. Now, there's a lot of circular revenue that's given. For instance, Nvidia recently marked a deal with OpenAI. With OpenAI, they're like, okay, we're going to sell you all these different products. And OpenAI is like, well, we don't have the money for that, so take some of our company instead. And so for each lot of units that are actually deployed in the data center, then OpenAI also gives Nvidia, in addition to revenue, a chunk of their company as well. Compare that to AMD. Now, I'm not bearish AMD. I like Lisa Su. I have friends that are in AMD, and I think they'll do fine. I think that they're a solid second choice, and they've done really well over the last 6 months too. So very happy for my retail shareholders there. But AMD had a similar deal with OpenAI, but it shows the weakness of their product relative to the premium that NVIDIA is able to command. Case in point, there AMD had to give up a part of their company in order for OpenAI to actually buy their product line. So it is a weaker footing. And so NVIDIA, I don't think is going to be the best performer in my portfolio, but they are just a solid anchor. Wouldn't mind actually continuing to increase his position. But again, my cash holdings are pretty small right now, and there's a little bit of chop in the market. So I'm mostly keeping cash where it's at, other than just a few ads, like I mentioned, into PayPal and tactical ads into Air if there is an opportunity, or any other names as well. Frankly, there's none of these where I'm like, I would not add at all. It's a question of price and position sizing too. Bitmine is one that I didn't really talk about, and let me mention that here as well. Bitmine is basically my entire swing position. It's over 10%. The reason why I'm in this is largely it's a levered play on Ethereum. Now, again, I did double my crypto holdings. Part of that was stock price action, but I had no Solana position. I have a small one now, and I have some ETH as well. My Bitmine position is actually larger than Ethereum. As you can see, crypto is just 5% of my portfolio. But again, a lot of this is just a swing, and I see over the next 2 years that this will outperform Ethereum. Most digital asset treasuries, when they will consolidate into, I believe, one player usually, but maybe sometimes two. We'll see if SBET turns that corner or not. But this is where my bet is. It's easy to trust Tom Lee. The institutions are very attracted to this play as well. And you can even see a lot of analysts putting out price targets and paying attention to the digital asset treasury, like Bitmine as well. So happy to hold that one over the next 2 years. We will see where it goes. Of course, I'm taking advantage of volatility on that by selling covered calls and cash secured puts as well, using the willing strategy and taking that revenue to either buy Ethereum or also buy more BMNR. Ethereum is just very well positioned among crypto. Even if crypto winter comes, I don't think I'll regret buying here if we look out about 2 years beyond. So anyway, that is where my portfolio is. It's not as much of a shift as it was versus the previous quarter. I do also want to mention that about 20 or 25% of my retirement assets are in an account that I maybe will check twice a year. I don't really actively manage. It's all in broad ETFs like the SPY and the NASDAQ, which allows me to do a lot more concentration in names like Robinhood. Of course, this is a natural concentration that started out at 5%. So let me know what you think in the comments. Which of these, if they were your position, would you sell instantly and just get rid of? And which would you end up wanting to double in size? Very curious. Let me know. Thank you guys for watching, commenting, and subscribing. As always, happy investing.